The European Central Bank has unleashed some extremely aggressive measures to prop up the eurozone economy. Now, it has cut all three of its interest rates and expanded buying in the hope of coping with ultra-low inflation. Jong-hong with the details.
The stimulus measures were all out and comprehensive. For the first time, the European Central Bank has paved the way for a zero-interest rate era by cutting the key lending rate to zero from 0.05%. Also, it pushed the deposit rate further into negative territory to minus 0.4%, a cut of 10 basis points, and the lending facility rate was cut to 0.25% from 0.3%.
The Governing Council expects the key ECB interest rates to remain at present or lower levels for an extended period of time and well past the horizon of our net asset purchases.
The measures are hoped to boost the flagging eurozone economy, especially by helping to lift inflation in the eurozone. Inflation has remained lower than the central bank target of 2% for 3 years running. In addition to the rate cuts, the ECB added it would expand its bond-buying stimulus program by raising monthly purchases to 80 billion euros from the current 60 billion, and that it will also include purchases of corporate bonds. The host of measures deemed more radical than investors had expected were the latest in the ECB's quantitative easing program that began a year ago.
Well, the decision of the ECB is a surprise for the entire market. It's beyond expectation, and that's why the market goes up naturally. But on the other hand, the people who are concerned about a possible exit and possible bubbles which might develop are bigger and bigger, and they rise.
As for the day's trading, European markets fell across the board after a brief rally during the day. The FTSE 100 in London closed lower by nearly 1.8%, while the DAX in Frankfurt seemingly bore the brunt of the ECB's initiatives, plunging more than 2.3%. Jong-hong, Arirang News.